Hello and welcome to eCommerce Matters, brought to you by BlackCurve. We help e-commerce businesses make pricing decisions. Today we're mixing it up a bit and we're doing a pricing teardown on the appliance sector in the UK market. Think dishwashers, washing machines, toasters, and you'll be with us. We're going to use data collected from the Google Shopping Marketplace and we'll peel back the curtain, giving you an insight into the pricing strategies of the various players in this appliance market. So without further ado, shall we get going? Also, I should probably introduce Rob. Hello, Rob. Rob Horton joined me as always. You well?
Yeah, I'm all right. I've realised I've been completely conditioned by the theme tune because we've been doing a lot of other marketing stuff recently, and we've been recording it and blah blah blah. And without the theme tune, I don't know when it's starting. I've got so used to just being like, game face.
You should always have your game face on, though, Rob. Surely, is that not the?
I work in tech. I think game face is always off, isn't it?
Well, it's turned on today, so that's good to see. So I'm Philip Huthwaite, the founder of BlackCurve, and as I said, joined by Rob, and we're going to look today at the appliance sector, and we're going to give you some insights into this particular market. And I thought it'd be a great place to start to sort of just kind of set the scene with some of the players. So who are the major players that you're seeing in this particular market, Rob? Who are the names that are cropping up?
I mean, it's really not very surprising. AO, John Lewis, Argos, just kind of the big name brands that you kind of expect.
Yeah, there's certainly also some...
Sorry, yeah, I was going to say exactly the same thing. It's worth saying that it's actually a very wide market in that there's there's a lot of overlap, but there's also a lot of non-overlap, if that makes sense. So people's product mixes tend to be quite different. So it's actually a really interesting space, I think, with lots of opportunity.
Yeah, I mean, one of the names that keeps coming up on my analysis is GBE prices, and you know, I must admit, personally, that's not one that I've necessarily come across before. There's knees.co.uk as well comes up, and the interesting thing is, as you touched upon, they've all got very different product mixes, haven't they? I mean, there's certainly an overlap. So when we're talking about competitor data or making decisions on what are my competitors selling and then reacting to it, you know, we're seeing that actually the overlap between these competitors is sort of 20-30%. Is that kind of in line with what you're looking at?
Yeah, I would say I've got a fancy dashboard that I can look at actually, and it tells me. But yeah, it's about that. It's usually 15 to 20% ish. I would say is about right for what I would call key competitors.
And that brings up the first, I suppose, the first conundrum of a pricing manager, or certainly means that the buying teams are doing the right thing. Because certainly something which we've looked at, talked about at great length on previous podcasts is don't necessarily always you just compete on price, right? A massive way of competing is by mixing your product set, making sure that you don't have a product set that's available that other people can't have access to, and then that means that you can step off the treadmill and not automatically have to react. And I was actually really surprised because I just assumed that actually the overlap in the appliance sector market, because there's lots of branded goods, there's like Hotpoint, DeLonghi, those kind of brands. I just assumed that all of these players would actually have, you know, northwards of a 50% overlap. But actually, you know, they all have not got they've all overlap, as we've said, sort of in 20 kind of 30%.
Yeah, we should say that we do only see what comes up on Google Shopping, so it might be a bit higher. But I think I think you're right. It's a really interesting market where you've got a lot of these brands are also starting to go deep. I was going to use acronyms, but direct to consumer, right? So if you're reselling from a supplier, you need to kind of either bundle or kind of come up with unique ways of selling this product to really differentiate yourself. Because I mean, I've got an example up here which I think is quite interesting, because I'm looking at, throw back to earlier episodes, but I'm looking at Dyson Cyclone V10 Hoover, which is a really core consumer item in this space, and Dyson sell it. right? Dyson UK sell it on their website, and most of what I would call the core selling brands are just matching that Dyson price. Now I don't know whether that's because it's enforced from a map side, like they, or whether that is just kind of where the market's bottomed out. But it's really interesting in this space that you actually have the brand as a vendor in the market, I guess.
Well, I say not recently, but they've got their own direct-to-consumer web store, right? Which actually I think a lot more of the suppliers are looking to do. They obviously have arrangements that means that when a product's launched, it's got to sort of stay within a certain boundary. But once that initial period is passed, it's kind of open season, right? So I think that particular product, that's a fairly new product. Am I right in thinking that particular Dyson one, or is that an older one?
It's the one I've got, so I don't think it can be that new. I mean, they always reiterate these, right? Like, I mean, this is the other way that a supplier kind of creates new demand in a marketplace rather than selling the same model. They tweak some dials and do the rest of it. Yeah, you're right. I think the direct-to-consumer thing is actually quite an interesting thing to touch on briefly, because it's the rise of these platforms like BigCommerce and Shopify and all the rest of it that have made this stuff so easy to spin up a site and get going. I personally know people who run agencies doing that for brands, and now that the ability to spin up an e-commerce store is so easy, there's kind of no reason for brands not to be doing it.
So the next thing I wanted to look at is sort of price position of these players in the marketplace. And you might assume that all of these particular players are reacting constantly to the market, and so the market changes, they're all going to be in pretty much parity. Now, the data that I've got up in front is from June the 1st to today. Mm-hmm. Can you guess the top five suppliers, top five retailers, in terms of who's the cheapest, rather, not the top five necessarily? Who's the cheapest?
The cheapest, right, from what I've been looking at, so it's kind of cheating. But I don't know. It's hard. I find that I would be better at doing the more expensive ones than the cheaper ones, I think, because at the lower end of the market, it tends to be much more price competitive, so you get a lot more smaller players in. I certainly see knees down that way a lot. GBE, who you'd already mentioned, I've seen down that way a fair amount.
Well, shall I put you out of your misery then? And
we'll probably easier.
So actually, come back to something we've said earlier. The smaller players certainly seem to compete on price. Okay, yeah. And that indicates as to why they are a lot of the time cheaper, and they appear as sort of the cheapest in terms of ranking on average. This is their average price over that period of time. So what's that, 4 or 5 months? So Flow Deals is actually the cheapest. We've got AQ Deals, we've got GBE prices, we've got RDO, and Appliance City makes up the kind of top 5. John Lewis is not in there. AO.com is not in there.
But this is what I was saying. It was easy to guess the other ones because AO is consistently more expensive from what I've seen, which is interesting because they obviously have a pricing strategy where they run a price match promise, right? So which is almost like a mea culpa pricing strategy, and that we're going to charge more unless you call us on it, and then we'll drop the price. John Lewis obviously again is higher. Argos tends to be a bit higher up on the things I see. It makes sense. These are big established brands that have that brand presence, so they don't have to fight for conversion in quite the same way. Because if I go to John Lewis, I know John Lewis, I know the brand, so I just kind of I don't have any cognitive dissonance or worry around it. So that makes sense to me.
But yeah, I would say, I know they've scrapped this never knowingly, John Lewis specifically have scrapped this never knowingly undersold, but all of this data is publicly available, right? So, okay, their particular price policy was actually bricks and mortar store and online only, so I'm doing a bit of a disservice there. But I think what I'm trying to say is that I'm pleasantly surprised and pleasantly pleased that the big players in the market are using the power of their brand, they're using the power of their reach, they're using the ability for them to offer things like extended warranty, better service, to make sure that they're not the cheapest, because they're working out, they're clearly worked out some of their pricing power.
So have you seen the new Amazon advert?
I haven't. Go on. What's this one?
Well, I think you as the founder of a pricing company should probably watch it, but it's a low price, low price, low price. The whole mantra for the advert is low price and fulfillment, which I think is really interesting. So they clearly have decided that they can kind of leverage their operational efficiency to really bang that message home and drill in. And we actually don't really see them competing in this space quite so much. As in, it's often people selling on Amazon rather than Amazon themselves selling. But I'm really, after doing the episode kind of on the John Lewis and why they might be moving away from it, it's actually really interesting to see like probably the biggest player in the Western world in e-com coming back down the other way.
I mean, is it an everyday low prices kind of EDLP sort of messaging?
Yeah, exactly. It is not we will be the lowest in the market, right? It is kind of strong, consistent messaging of like, we'll give you a fair price and you get it quickly.
Well, they have the power. They've got the beauty that they've heavily invested in supply chain delivery, all of the mechanics. So actually, exactly. They might have a lower price on certain circumstances, but I would bet my cotton dollar that their cost is a lot cheaper than other people.
Yeah. Because it says nothing about margin, right? I mean, this is the reality of it. Because if you have the infrastructure and the backing, and I mean, it's bizarre, not bizarre to me. It's still a growthy company. It's like one of the biggest companies in the world, and it's still growing consistently. Like, I would still buy Amazon stock now, right? Actually, probably even more now after the market's devalued.
And after Rob's top stock purchasing tip there, it's gonna go up again. So we better get in there before.
All our 10 listeners all go buy Amazon stock, and it moves the price up. And I take the arbitrage.
But I mean, they've managed to do the double punch there, haven't they? They've got the messaging out there that it's good value, and also they've backed it up by not just taking the margin hit on there. It's investing in their whole infrastructure to support that messaging, which someone like John Lewis that has physical presence, that has expensive staff in their whole operation, physically in the stores and so forth, it's a lot harder for them to get to that. Absolutely they can invest more in their online offering, but it will just physically, they do not have the economies of scale. They've got however many years behind that. So,
and fundamentally, it's the kind of thing that if you plan from it from the start, it's much easier than trying to pivot into it. It's the same with any business, right? It's the same. It's especially true in tech. If you put strong fundamentals in from the beginning, it makes it much easier to pivot than otherwise. Anyway, I feel like I've derailed the conversation.
So if we go back into the appliance sector specifically, one of the things that we've found that works very well when we're talking to our particular customers about how can I identify which products do I need to react? So which products do I need to change my price based on what the market is telling me? Okay, and how do you know that if you only have access to competitor data? Okay, so one of the ways that our dashboard certainly supports you to do that is by looking at the frequency with which the competition is changing prices, because that's a strong indicator that there's lots of players, they're moving around, they're focused on this product, and it just is an indicator that's where the money and the time and effort should be focused. Now, one product which keeps coming up time and time again, and actually, I don't even when I looked at this data about a year ago, it seemed to be this particular product. So the product that is the most competitive from June to September, as in, if you don't have your price on the market price for this product, okay, what are you doing? It's a Range Master range cooker. Okay, who'd have thought it, eh? Who'd have thought it?
So
Did you buy that? Did you buy that cooker? You bought a cooker 6 months ago. Is that the one you bought?
Yeah, but I live in a rented flat and did not spend £1,000 on a cooker.
Probably a good thing. A good thing too, eh? Holy moly! Yeah, it's £1,899 in a few suppliers.
The price delta was about £300, I think, between the most expensive and the least expensive. Is that?
Yeah. That's what I'm seeing.
Good.
Yeah.
It's the same one. I also have discovered the Range Master range cooker in my research. I think this is a super interesting one because it's got a really clear demarcation between kind of, I'm hesitant, like more well-known sellers charging a premium than lesser known ones, and this is where the competitor data or competitor analysis piece becomes really interesting in terms of like, here is somewhere where if you have a strong brand, you can make serious extra margin, like to this on a unit. So what's that? Like a fifth, 20% almost, £300 on over 1,500. I mean, my margin calculations on the fly have never been particularly strong, but like, so if you have a strong brand, and like we were talking about before, invest in that identity, you can use your pricing power to make 20% more margin than, well, an extra 20%, sorry, on the product than you would otherwise. That's huge.
I mean, I'd take that to the bank all day, right? You know, so it's phenomenal. I mean, I'm just looking at some of the other products here that are that we would put in the competitive rank. That actually I'd ignore all other kind of price elasticity stock. You know, you've got to be in the money for these products, or they're not going to shift. Okay, we've got a meal washing machine in there. We've got another Range Master cooker. We've got a Dyson Ball multi-floor vacuum cleaner.
Range Master this time.
Yeah, it's a different color. The first one was stainless steel. This one's black. We've got an upper baby pushchair. Okay, in there. We've got Range Master. Goodness me. Siemens washing machine.
Something super interesting here, right? Which is the brand segmentation. So you can immediately see that certain brands are more price competitive than others. And it may be brand, it may be category. So you don't know. It may just be that, like, fundamentally, if I'm buying a cooker, as long as it's one of within these brands, I'm just interested in price, right? Like, whereas for something else, like, I don't know, looking at my kitchen examples, I don't know, I love Le Creuset, right? Like, I'm a very middle class person who likes cooking and stuff like that. You pay up and pay a premium for it, and that is not a price driven cooking product. And I think this is where competitor data can be super powerful in terms of telling you about especially looking at the price changes and segmenting your inventory and working out, okay, so these ranges or these brands I have to be super competitive on, and these ones I have kind of opportunity for margin or whatever. Because we say this a lot, in that there's always going to be stuff you have to compete on, right? It's anything where price is the primary factor in demand is going to be, you have to compete on price. You have to be price competitive. Your volume, well, your profitability, who cares about your volume, but your profitability will be dramatically affected by any change in price. And this is where you can start using the competitor data to segment your inventory and work out what is price driven and what isn't. And this is something that actually we've started doing a lot of recently with our clients, in that it's really important to know not just whether pricing is working, that you need to be competitive, but where you're not, because that folds back into other business decisions beyond tactical pricing ones.
Yeah, and I think that's critical, right? Because this comes down to how you set up your product mix, because then you can identify, right, this is where you can steal a march, and it's clear, looking, coming back to what we said earlier, these are the types of strategies that certainly the bigger players are adopting, that they're trying to get less coverage that other people don't have. They're working out what products I've got to be competitive on and what products can I purchase that other people necessarily can't get access to, and it's happy days, because then I can play around. I might be able to make more margin on the non-competitive products, right? The products I don't need to follow the market on. And then
I think it's like get back to Rob's rule of stocks, right? But the opportunities are in like the non-sexy stuff. It's the stuff you forget about, the stuff that people aren't interested in, the stuff people aren't looking at day to day. So you may have a lower frequency of sale, but if you snowball that over a number of products and over a range, that there's often much more opportunity in that kind of longer tail side than in these core competitive products. And traditionally, people will say we need to go into the sales history and use other data sources to analyze it, like look at your marketing spend, whatever. But actually, you can get a lot of it just from the competitor data in terms of who's playing around in the marketplace. It's a very good proxy for it.
Yeah, and I mean, I think to take that a bit further, I will put my hand up and say I am probably naturally an anxious person. I don't know, Rob. I think from based on previous conversations, you sort of share some of that anxiousness as well about certain parts of your life. And actually, talking to pricing managers as well, there's kind of an anxiousness, there's a worry, there's a nervousness, there's a paranoia of I've got to be competitive. I've got to follow the competition. Okay, and really what we're trying to do with this conversation today, and also with our dashboard, is flag to you as is almost let's take a beat. Okay, worry about these products. Worry about what the market is doing on these products. Follow on these products. And one of the ways that you do that is by working out the frequency with which people are changing prices, and then you can steal the march on the other products. Don't worry about them on the other products. Start doing price tests and so forth. Okay. The next thing I'd like to go on to is sort of frequency of price change, and the most competitive products are not actually changing price as frequently as I would thought in this particular sector. So these range master in the last 5 months is the data that I picked up. So from June to September, these range master products have changed 39 times. Okay, 39 times in that period. Okay, there's been a price change. So on average, this is getting changed once a week by certain players. Some of them are changing it more than once a week, but there is once a week between these price changes. I mean, does that feel about right to you? They're competitive, but they're not like changing.
We obviously have this. We did a whole podcast on this, didn't we? But we have this conversation a lot. But you've got to think about consumer behavior and pricing managers in particular, marketing managers, e-commerce people are scared about putting off consumers or putting off customers, which I think is completely valid. So if I'm going to spend $1,000 on a cooker, say on a range master, I need time to process that decision, right? It's not a snap decision. Like you say, I'm an not anxious person, but I'll check the market. I'll look around. I'll read some reviews. I don't want the price to change 5 times in that period. I don't want to feel like I'm investing in the stock market and trying to time a strike price and something. It's just like, okay, it costs this much. Okay, can I do that? Go look at my finances, work it out, come back. So for especially in appliances, where I think the average price is probably higher than other sectors that we might look at. But a lower frequency of price change makes absolute sense. It also makes sense from a perspective of just understanding the market, in that if you're trying to tune your pricing outside of competitor data, but if you're just trying to tune your profitability, you need time to see whether that change has worked or not, because you're not getting the volume of transactions through to do that on a daily basis. So it doesn't surprise me. What I would say is that you might see that change dramatically as we go into like November and the holiday season, because I think that's a much more intense shopping period. And so the volume of transactions will go up, which means in effect, the associated frequency of price change will also go up. Yeah,
no, I think what I'm particularly interested about that is also there seems to be a a very strong pattern on the day of the week that these are happening. Okay, and
We've also done a podcast on that.
and it's typically kind of a Monday and a Friday, Friday. Okay, and if you think about the human behavior, right? You've had your trading over the weekend. You know, most of us aren't. You know, have the good fortune you don't work over the weekends. You come in on Monday, you're making a lot of decisions, and then also you want to set yourself up for the weekend trading on the Friday, right? Okay, so one of the things which you can start to use this data to do is how can you use that to steal a march? So if you can work out the patterns, and it might also be because your particular competitors are scraping on only certain days, or they only have access to that data on certain days. So what I sort of strongly suggest that you can start to do with the data is look at the patterns and adapt your time of day, your frequency with which you change prices, because this is where you start to potentially become an influencer on the market. Or alternatively, you know, you start to work out that actually they can't react as quickly to you. They take some time to get the data. It takes some time to make that price change. And in that period, you've stolen a march. You've had 3-4 days, and then you can do it all again, and you can do it all again, and you can do it all again.
Yeah, I'm quite malicious, so I would suggest to people to kind of select a subset of products that kind of sit in the space they care about, that actually have their key competitors in it, and start nudging the price a bit just to see what happens. And that will also tell you who's using repricing technology, who's scraping your data, and how they're following. Because you see this this kind of wrapping effect. So you make a move, they follow. You make a move, they follow. You make a move, they follow. And that's a story that's kind of come out really nicely in the dashboards that we put together, where we're talking to people in the same way. Well, we know these guys use a competitor of yours or whatever, and we can see it. Like, we can see when they're reacting, we can see the frequency that they're reacting, we can see how well they're listening. Fair play to them. We can see their technology working. I mean, in reality, not as well as ours, but
Absolutely. So one of the things that I strongly believe in is not necessarily taking just the price at face value and assuming that that's the only value that you get out of it. It's everything that happens in association to that price that is actually where the gold is. Okay, so it's using the data to work out what's the pattern, who's got repricing technology, and using that as well to work out, well, if I've changed price on a certain day, how long has it taken them to react? Because then that is itself is an indication of how frequently they are collecting data from you and so forth. And this is what, and who doesn't react as well. And that in itself is golden, because then you can use that to work out, to adjust your own strategy.
I'd add to that, which products, right? Because I think a lot of, at least from my experience working in this industry, a lot of people will be focused on their key lines. Like, they will come in, even if they're not using any kind of software to do it, they'll come in of a Monday morning or whatever and go on Google Shopping or go on the key competitors' websites, track through, update a spreadsheet with who's selling what for what, and then go and make a decision. That does not scale. So they'll be doing that on like 50 products if they can. Like, that's almost a day's work, right? So this is what we were talking about earlier about like assessing where the opportunity is, and it's often in the products that people forget about. I mean, we had a really key example of this in coronavirus, when people had to start buying substitute products or secondary products, because the substitute products, that's the phrase I was looking for, because the stock just went. And that worked really well for people running our kind of demand-driven software, because we were able to analyze it and pick up and hike the price on a little bit on products that weren't necessarily, you wouldn't even think of, right? We joked about butterfly kits before, but like just the kind of products that you shift a couple of a month or a week or whatever, and they're not your high volume ones, but then suddenly, because you can't get other products, become your high volume ones. And that actually, I think, is where a lot of the opportunity of this kind of analysis is understanding, okay, well, these ones I was going to have to compete on, and really I know where the position in the market that I want to be and what's optimal for me because of my brand and the rest of it. But it's finding out where the price changes aren't happening and where it's not reacting, and then kind of building your opportunity there.
A lot more soda water makers were sold during the lockdown, and a lot more water softeners and those forth, because people were spending a lot more time at home, and then it's having the ability to react quickly to those changes. Are there any particular products that you'd like to dive into? I mean, I might stay with this Range Master just for a bit longer, because I'm looking at this product history, this pricing history chart for this particular Range Master. What are we? Range Master Professional Plus Gas 110 stainless steel, and it is like a work of art, this particular chart. But the interesting thing is everybody is following. Everybody is absolutely following each other, and it's a purely market-driven product. But what I will say is that the price is not exactly the same for everybody. So everybody has clearly got a strategy that they're going to be within a certain parity of an alternative. So who we got down the bottom on this particular product. Let me hover over. So we've got the likes of Stoves R Us. Okay, on this, they're regularly
strong name.
Yeah, strong name. They're regularly kind of near the bottom. And who we got up the top? We've got Trading Depot is near the top on this particular product. And who we got? I'm just picking these at totally random. Knees Home and Electric is kind of in the middle mix, but they're all following this amazing work of art. And so
you see who's moving it. So who can you work out who's leading it?
It looks to me like, let's have a quick look.
Put you on the spot.
Put me on the spot here.
That's a really interesting point, is that if you start seeing this, someone will have to make that price change. Well, that is not true, actually. Someone has to make the price change, or the supplier has to change the cost price of the unit. And that's another way that you get that kind of sinusoidal effect.
So what looks like it, thanks for putting me on the spot there, Rob. What looks like it is actually Appliance City here is cutting through all of the data, and every time they cut through, the whole market reacts to that particular product. So I haven't actually checked how big Appliance City are compared to the others, but it certainly indicates that on these appliance companies' competitor strategy, Appliance City is up there as somebody that they're going to at least influence a reaction.
Mm-hmm.
Or alternatively, what actually might be happening here is they're having parity to the market price, the average market price. Okay, that's why we might see this. They're all staying within kind of parity. But as we said earlier, we've got a big mix of kind of 20% plus the market price, all the way down to sort of minus. Actually, they're not too below the market price, to minus 6.5% of the market price there. So they're doing. There's a reasonable range. Were there any products that you particularly like to raise and to have a discussion about?
Well, I called out the Dyson one earlier because I thought it was interesting, because that's one that's got a D2C player in it, and actually the influence of that player on the market really flattens it out. So everyone is literally. Now, I know Dyson's a super competitive product, but everyone is on the money. Like, there's a few rogue people selling a bit above and below that I wouldn't really. I mean, they might be cool, but I don't know. But like, and I find that bit fascinating because of how tight. It's like one line, right? It's like there's no breadth in it at all. So on this product, basically everyone's decided we have to match this price, and then people will buy from us because of who we are, or maybe they can compete on shipping, which I don't have up here. The other thing that's really jumped out to me, and I'm just flicking through, I'll name some products, but it's actually pretty similar. It's like how congested this marketplace is. So I'm looking at freezers, Bosch Series 4 stainless steel freezer. Quite a lot of freezers here, actually. And then if I look at even like something called a warming drawer, which I don't actually know what that is.
You haven't been watching Bake Off. You need to watch.
No, I need to start it. The new Matt Lucas season. It looks good. But there's a lot of congestion of very little price movement, we do see the kind of the names that we mentioned earlier kind of in the same order each time, which I think is really interesting. So guys like AO, who clearly have a strong brand, actually do tend to be, I mean, I'm looking at now, I can look at a an Eliska Ascent Stripe 90 centimeters wall mounted vertical black glass.
Oh.
Yeah. And AO are like £200 more expensive than the rest of the market on what everyone else is selling for 500 quid. The lowest price is Fab Appliances at 432, and the highest is AO at 759. And that is a spread. And clearly they can get away with it. That's the fascinating thing to me. So this kind of going back to competitor pricing strategies and just following lowest competitors in this space clearly is not optimal, because brand identity evidently plays a key part. So we've got this spread through the market in some way due to strength of brand, I think, just from this isn't real analysis, but just looking at, if I go from names Rob doesn't know to names Rob does know, actually there is a clear market dominance story in all of these data, basically across all the products.
Yeah, and this, I mean, the Dyson example is more than likely because that has such a strong brand presence, and Dyson itself has such a powerful brand that kind of keeps it quite stable, and it's a kind of a premium product. But you know, the fact that if you look at some other products that aren't as quote unquote sexy or as well known, the fact that a lot of the time the prices are staying flat is a strong indicator that a lot of them only have competitor pricing strategies at play here. Mm-hmm. Okay, and they are simply looking at the market. I mean, I know the AO.com guys, and it's unlikely to be a mistake. They're very much on it for that particular product. So more than likely, this is an indication that they are so far off the rest of the market is because they've got some supply, some demand strategies going in there, which is keeping that price at that level. You know, to keep it simple, you know, if that product is still selling at that higher price, why would you bring it down to the market? And really, that's what demand-based pricing is trying to ascertain. Okay, it's trying to work out, right, how's my demand faring at this price point? If I increase it, does that have an effect? If I decrease it, do I not have an effect? And by using things like demand-based pricing, and there are other pricing strategies as well, that enables you to step off the treadmill. But certainly in this appliance sector market, we're seeing that I threw my microphone out. I was getting far too excited there. I have to chop that out, won't I? What time was that? 45. So certainly in this particular market, we're seeing that a lot of them are pure competitor-driven pricing with minimum margin safeguards in place, and that dictates that's the reason that we're seeing this kind of layering of everybody staying.
I would chip in on that, and I would say that is common for most FMCG spaces that we work with. You put your bounds in. I mean, actually, it's a strategy that works that we run very well for people. I was talking to George comes up a lot on this, but I was talking to George this morning about it, and what really is effective in these kind of spaces is kind of setting your boundaries and then playing within it and find, so you know that you're never going to go miles away, and you're never gonna like undercut so much that it becomes inefficient to sell the product. But it gives you that space to play with the demand-based pricing that allows you to effectively algorithmically work out where your brand point should be. So if we go back to this space, are you AO at the top? Because you might be, and you might be for certain products and not for other products. That's the real nuance of this, because the other interesting thing is that the strategies are consistent across all products, all products, but for a lot of products have the same pattern, which for me is an inefficiency, because there will be brands or ranges that you have a stronger brand presence for than others. So I would expect to see you at a different position in the marketplace for certain products than others, if that makes sense. So when you see the same, in effect, colored lines in the same order on every chart, there's also opportunity there.
But they're not price testing though. So if a company had set up a floor and a ceiling and was testing in between that, you'd see more minutiae changes, right? Whereas all that this is a cost plus or minimum margin safeguard, or that cost plus safeguard.
Or competitor plus.
Yeah, that's true. Competitor plus or minus. Yeah.
And that might be more likely, well, a bit of both actually. I think you're right, and the safeguards will be cost plus, and then it's within that range you'll just be saying, well, I see myself as a bit more expensive than these guys and a bit less expensive than these guys, so I want to sit somewhere in the middle.
Or within range of market price, right? So is there any other products, Rob, that you wanted to flag and speak about?
I mean, I can dig into this all day, but I feel like we've covered most of the key points in the space, because as you said, it's super competitor driven, and part of that is because I think one of the things it's worth flagging that I did notice from the dashboard is that the volume of players in the space, other sectors we interact with are much less competitive. There'll be 4 or 5 people, and then maybe some drop shippers or some resellers that you kind of want to ignore. But there are often like 4 or 5 key players in the space. But there's at least 10, maybe even 10 to 20 here who are, I would quote unquote, serious players, which is it's indicative of a healthy market, really, but it is not. It does show that the market is very, very competitive, I guess.
Okay, well, thank you, Rob, for joining me today to talk about have a pricing teardown of the appliance sector market. Something a bit different. We've been asked to talk some more data, so that's, we hope you found today enjoyable and insightful. And if you comment well and you give us good references, we might pick your sector next. So you've been warned. So just to summarise from the appliance sector market. There's a lot of noise in here. There's a lot of competitors. It's a highly competitive market in terms of, if you look right and left, you're going to have somebody that somebody else could buy your product from. But what I will say is, it's nice to see that these players are making sure that they select products well, so there's not an overlap. But also, in the caveat to that, where they do have an overlap, a lot of the players here are driving a very pure play, competitor-led pricing strategy. And what I would say is that if you want to step off that treadmill, you've got to start looking at supply-driven, at demand-driven pricing strategies, and that will help you beat the competition in a much smarter way. Okay, and if you are in the market for a Range Master cooker, apparently now is the time to buy. So you've heard it here first. Well, thank you very much. We are BlackCurve with the podcast E-Commerce Matters. We help businesses make pricing decisions, and e-commerce businesses in particular. And this podcast is available on all major podcasting platforms, such as Apple and Spotify. I said Shopify last week and got pulled up. So it's from Spotify. And we look forward to welcome you next time. Thank you very much. Take care.